G'day folks, welcome back to another update for Bitcoin and Ripple. Now there's still bearish on the daily chart at least. We're going to include some back testing. Before we go any further, make sure you hit that like and subscribe button, and also reference +1 videos where we do a deeper dive into various strategies which we gloss over maybe in today's video. Remember, these daily videos are more intended for you to learn the discipline. They're not, if you expect to watch a 5-minute video on any trading strategy and go away and make money, you're probably fooling yourself. So just do get into a routine and a discipline as I show you these videos. Now, in terms of the outlook, Bitcoin is trading just above 100,000 US dollars as institutional interest deepens and its role as a risk asset with safe haven tilt grows amid macro geopolitical uncertainty, though downside risk remains if inflation surprises or policy tightening persists. Meanwhile, XRP is a consolidation mode around 240 with meaningful upside potential if it breaches key resistance and benefits from developments in cross-border banking and regulatory clarity. Its geopolitical relevance lies more in global payments infrastructure than pure safe haven behavior. So first, looking at Bitcoin on the weekly chart, we always go from the highest time frame, then drill down. So on the weekly, we're broken below our moving averages on the price chart, and also it's been below the moving averages for some time now on the CCI1500 down here. Now again, notice there I gave you an early warning, when it breaks below the CCI. That's actually earlier warnings in terms of getting in and out of trades. Plus we also had this bearish divergence, lower highs on the CCI versus higher highs on the price, and we drew a target range there at 23-38%. And that target range, for those new to the channel, go from that high to that Fibonacci low. We take that the significant low before the divergence started, and that's at 23-38% as a minimum. You can see that it touched it almost immediately. Sometimes it just touches it and bounces out. Other times it goes, and it could actually fluctuate in that range. Other times it actually may fall right through and fall further. So at the moment on the weekly, it's bearish and it's hit its divergence, but we'll keep an eye on that to see how it tracks in terms of future movement. On the daily, it's actually been still in a decline. We actually had a bit of a break to the upside, and I'll show you the back test in a moment how that you would have probably traded that. A bit of a retrace there. It broke into the moving average on the CCI. Notice it gave you an early warning on that candle there. Then it finally broke higher, and then you would have entered short again when the CCI broke below and the price is also below the moving averages of its respective chart. And you'd still be in a short trade. Again, notice a little bit of a retrace there. But at the moment, the other thing we look for is any divergence, and there's no divergence currently on the daily. Now on the hourly, which is what we use a back test and a trading on, we've got the price below the moving averages, but notice the CCI is in that moving average band, was giving us a caution not to go short, but not even to go long at this point. We want to make sure they're both below the moving averages or both above to go long. And next thing we look for is any divergence, and there's no divergence currently to be aware of. Going back here, there's no divergence. Now notice there was nothing back there as well. Now looking at the back test, we start the back test here from around about the 11th of October. Now remember, the 11th of October is marked on the daily from this period when the price breaks below. You could have started it from the 10th actually, possibly. But when the price breaks below the moving average, and so does the CCI, you would have started short trades from there. Had a bit of a retrace, but eventually fell. That's where we started the short positionings. And you can see there that would have made a few little returns. But notice here on the hourly, we had a bullish divergence, higher lows versus lower lows on the price. And at this point, notice the profitability. You had a couple of average downs. And as soon as you start seeing the moving averages turn up on the CCI and the price, you would have closed out your trades. Now notice here, you would have got into another short position in that little drop there. Price and CCI are dropping, but there's a bit of a consolidation there, and that's where you would have averaged down a couple of times, and then finally broken out and closed out your positions with maybe a couple of contracts held at that point there, but still up in your profitability, and you would have avoided that drawdown. Now notice here, we're trading $100,000 contracts on Bitcoin in the back test, and the account here is starting with 100,000, so you would have completed your account fund if you had stayed in the trade. But again, don't stay in a trade when the price and the CCI moving averages go against you. Now you might say, what happens after that? Well, again, avoid trading during this period, going short, and you don't go long either, because remember the daily has to be consistent with the hourly. You would have started taking short trades from there. So what we do now. So Again, starting from that point when both the price and the CCI moving averages are bending down or going in short positions, you take short trades, a couple of average downs with a little bit of a retrace, again following the moving average bands, both declining, and you would have closed it out at the very latest at that point based on the hourly chart, maybe holding a contract or two. That's where you would have had a stop loss. But you're still up there if you're trading according to the plan. Going short again, when the price and the moving averages on the CCI turn to go short. Remember, we're not trading long, we're only going short in accordance with the daily, and you're closing it out at that point there. So again, avoiding that, holding on to shorts when the price and the CCI moving averages are in an upswing, that would have avoided that drawdown, same as what it did back here. So for Ripple on the weekly chart, first off, we've got the price below the moving averages, and so is the CCI, so bearish momentum only on Ripple. We did have this bearish divergence back here, long-term bearish divergence on the weekly, lower highs versus higher highs on the price, and that actually broke down through our 23-38% Fibonacci range. You can see there it sort of hit it a few times, broke into it, pretty much went sideways, and we're pretty much still sideways actually, and still fluctuating around the 38% Fibonacci level. Now this could fall further, or it could actually retrace, so we don't know. We take it one step at a time. Looking at the daily, again, going short according to that little period, according to the weekly, and the price and the CCI still declining. Now, there's a couple of false breaks here, but notice as well, even back here, the moving average band, that's why I like using multiple moving averages, they're still on a downswing. There's a bit of an upswing here, a bit of a false break. You could have traded that possibly with a couple of small little trades on the hourly, but again, going in direction of the higher time frame. The weekly, the daily here is in a downtrend. Currently it's consolidating, but still pretty much in a bit of a downtrend if you look at the moving averages. Now looking at the 1 hour, again, what we look for is any divergence, no divergence currently. On the 1 hour time period, again, similar to Bitcoin, we've had a bit of a retrace. It's broken above the moving average band. The CCI is in that moving average. So I would call it neutral at the moment. Don't go long or short until we see a decisive move. And as well, I'd like to see the moving averages start turning up like it did back here to be more decisive on going long, or like similar to this period here to go short. So at the moment, avoid going long or short if you haven't got any positions open. Now in terms of the back test, according to the daily trend, we're going short only. So back, according from the 7th of October, you would have taken little short trades back there, closing it out whenever you see the CCI and the price moving averages curving up like they did here. Avoid any trades. Going short again, and then closing it out each time they go against you. Again, notice here the drawdown. Now we had a couple of little short positions here, but again, you've got to follow the daily to make sure that's also in a short position, and avoid obviously holding on to positions that are against the daily trend as well, especially during this little period. Notice the profitability dropping off. Now you possibly could have gone short once you start seeing the moving average band curve down on the price as it did there, as well as the CCI. And you'll notice here on the profitability chart, it started to increase, which was a positive if you're going short. Again, closing it out there, then going short again at that point. Again, notice the profitability increasing. If you'd like to get some share trading ideas, why not subscribe to the Patreon page where we look at various bullish shares each week. And this is a portfolio we've started tracking. These are all closed trades. We started trading since the 21st of September, keeping track of this portfolio. And in terms of percentage gain, it's returned at 9.67% for just over a month in terms of trading. So if you're interested in that, subscribe to the Patreon page, links in the description below. That also helps supports the channel. Thanks for watching. Hit that like and subscribe button, and we'll see you in our next update.